Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks. Today's date, Monday, May 12th, 2014. Insanely light volume. The market opened higher, shot up for the first 30 to 40 minutes, and since then has gone sideways to slightly higher. You can see the chart in front of you. This is the intraday 10-minute chart of the SPY, and clearly a gap up from Friday's close, a little shot up, and from that point on, sideways action with a slight upside bias there for the course of the day. Right now, it's 2:30 p.m. Eastern Time. What does this mean? All right, folks. Well, we have to see where this market closes. Based on everything I'm seeing, it's going to close right around this level. So therefore, you would kind of look to this market and say, all right, based on a recapture of this upsloping trend line, see this upsloping trend line right here. If I look back, you can see where it comes from, this pivot low to this pivot low to this pivot low. Based on the fact if we close above that line, that puts us in a short-term positive bias on this market. Now, very short-term, meaning just a few days. So you probably see some follow-through floating action, choppy sideways to upside bias. But right now, again, that's where we sit. Now, if we happen to sell off into the bell, and you see a sell-off below this upsloping trend line, then you would remain in a neutral to slight downside bias. All right, but one thing you have to recognize here, and I think this is really important. So if you look at this chart, and this is just going through pure technicals for educational purposes, I want each and every one of you guys to see exactly what I'm seeing. Pivot low right here, and a higher low. Okay? Pivot high, and a higher high. Okay? And then you had another higher low, but right here, you can see very clearly, okay? Here you did not have a higher high, and this is where things began to change. So you had a low, higher low, higher low, higher high here, but then you came down, you broke this upsloping trend line and made a lower low. The markets moved up, did not make a higher high. That was your telltale sign that the markets could be in a little bit of a trouble period here. Okay, and again, lower low from this low, so you changed direction essentially, and you did not make a higher high. It was just a double top. So that was a little switch over. However, having said that, from this lower low, so here was your higher low and your lower low. Then you made a higher low again and a higher high. Do you guys see that? So that essentially puts you back in that upside momentum phase of the market, which tells us that, again, the market won't have much upside here, but could have just a little bit in the short term for a couple days this week before you start getting into a period of negativity again. All right, so that's very important to view here. Very, very important to understand. And again, how would you notice a change back to being a negative? Well, if you come back below this upsloping trend line, that would be case one. That would only be one thing, though. Instead, what you need to look for is a pullback and a takeout of this low here. So here we started to regain our higher lows. You want to see a pullback and a lower low put in on the charts. And again, so a breakdown below this and a sell-off down into this range here. And obviously, if we bounce back at any point, you want to see a lower low put in. Just look for those lower lows and higher lows and so forth. And that'll really take you through and give you a good analysis base for where this market is headed. Okay? So let's take a look at a couple other charts out there. So we've looked at the intraday SPY. I want to go to a couple leading stocks out there. Something that I think is pretty important here. Number one, let's take a look at Twitter. So Twitter today up 5.5%. And by the way, last week I said when it breaks $30, that's your buy price. You can go back early last week and find it in the videos. In any case, it did that right there. And look at the chart. Since then, you've over 10% gain, almost 12% gain on the stock from that $30 pierce. So that was a nice call right there. But one thing that I think should get everyone's attention here on this chart as we zoom in on the intraday, and you can see the nice move up. It's a beautiful like wave type pattern. You have to look at money flow. Money flow is unbelievably important here, and what we're seeing here, we've seen over the last 3 months money flow flowing into safe stocks like Chevron, like Exxon, stocks like Verizon. I mean, you could just name a lot of these stocks that are paying a dividend, that are considered long-term holds, which will just pay off that dividend and are not at high risk for a huge devaluation. Those stocks have been seeing money flow regardless of earnings, regardless of anything else. Now, what's been selling off? The high-tech, high-beta plays. And my prognosis, based on Twitter, based on some other charts out there, in the short term, you're seeing that switch. Okay, in my opinion, you really are. Now, how? I mean, with the S&P up 16.5 points, Dow up 111 today, and the Nasdaq up 66 points, which is a huge move on the Nasdaq. How do we know that money flow is changing? Well, number one, the Nasdaq's up 1.6%. The Dow is only up 0.65%. So you obviously see a rotation away from the Dow safe stocks into technology. But even more so, just take a look at some of the biggest gainers lately that are underperforming today. Look at ExxonMobil. All right, today, again, as I said, the Dow is having a very solid day, not nearly up what the Nasdaq is, but still it's up 111 points. And Chevron, which has been one of the best recipients of money flow recently, is negative on the day. And again, just think about that, folks. If you look at the daily chart of Chevron here, okay, go to this chart, look at this move up that you've seen on Chevron. Just an unbelievably outperformance. And just a great move across the board. Granted, it put in a topping tail, which was probably a sign that institutions were selling in and starting to switch over to a kind of move out of the safe stocks here. But now you have this bearish pattern forming over the last week, and now we're seeing over the last week money flow starting to come into the Twitters, to the Facebooks, to the FireEyes, to a lot of these stocks that have been pounded lately. Okay, and again, just to go back to some of these other high flyers, take a look at Baidu, up $6.61 today. And you can see this stock's taken quite a hit lately off of its highs. Take a look at Facebook today, $2 gain on Facebook. Yelp, up $2.40. So, I mean, I could go to almost any of these stocks, even the FireEye, FEYE, which got pounded yesterday, or I should say on Friday and on Thursday and on Wednesday. And you can see clearly here that this stock is bouncing almost 9% today, guys. Just a great, great bounce there. So money flow is now reversing. Question is, how long will it last, right? I mean, is it going to last a week, a month, a year? You know, what are we going to see here? Now, I think it probably based on the spiders, and this is where you go into the overall analysis that I did at the beginning of this video, and what you have to look for. First of all, please notice that the markets, if you look at the charts here, let me just zoom into the highs here, and you can see a lot of trend lines here. But if you look at this high here, that's what we're into right now. So, I mean, you have a little bit of resistance. I actually think the S&P is going to go a little higher than this level. All right, so again, as long as you don't sell off below that sloping trend line that I showed you, you should be able to see a situation here where the market could fall back, well, could continue to grind up for just a few more days.